Good afternoon, everyone. Happy Friday. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody's had a great week. Looking forward to the weekend, long weekend. Everybody pull up your charts so that you can review some of the levels this week. Just a couple of quick reminders for everybody. We are having a long weekend in terms of New York Stock Exchange trading. So the New York Stock Exchange will be closed. So there won't be any stock trading per se on Monday. However, there will be a futures market. So I think if you are a futures trader, you know that because Labor Day is only a U.S. holiday. Nobody else celebrates Labor Day. The futures markets do open on Sunday at the regular time, right? So you will have a futures market to open at 3 Pacific, 6 Central, 6 Eastern. Yeah, exactly, Bill. Yep. Hi, Bill. Yeah. Exactly. Well, that was actually, you stole my thunder there, because I was going to warn everybody that you will have lots of thin volume as well. So just quick reminder. So let's kind of sum up the day. I was getting my members were in my chat group here. We're talking about like what happened today, why the sell-off. So it was a function of two things. Initially the market rallied on a kind of I guess tame in jobs number. In other words, it came in right along expectations, 310. The expectations were 300K, and so we did get a little bit of a lift off of that 3,900 that we talked about last Tuesday. And what happened midday is news out of Germany. I don't know if Dennis is in here, who's been putting some stuff on Twitter about. So the pipeline, streamlined pipeline, the Russian pipeline that feeds basically all of Europe, natural gas. They delayed the opening, and now some people are basically, and I've talked about this quite a bit. We know that Russia is going to weaponize energy, right? Oil and nat gas, because in retaliation for what's going on with all the European nations and so forth. Yep. That's okay. That's okay, Bill. No worries, Bill. Okay. And so where are we as we come in? One of the things I'm getting really excited about, two things, is and even you can see that today. I think I mentioned this last Friday, kind of repeat number two, where you saw the volatility, you saw the kind of the momentum kick in. And again, that's just a function of, again, we're sitting here on a Friday, probably one of the lowest volume days of we're ending the summer season, and algorithms, right? So I keep talking about algorithms, and all you have to do is look at a 5-minute chart of the S&P. And as soon as the news came out, you can see the momentum kicking in. Just like, again, this is exactly, I mean, you put last week's, after the Powell speech, and it's exactly the same thing. So this is clearly, where markets are thin. When you get these algorithms kicking in, they kind of feed on themselves, and you get the momentum. So for momentum traders, it's actually pretty good, right? If you can catch some of this momentum, it's not bad. So that's the good news for you momentum traders, if you were able to catch the momentum. But it was really choppy in the morning. So again, unless you caught some of the news or were able to catch some of that momentum. Here's the bad news. Next week, everybody starts coming back. All the Wall Streeters coming back. It's vacation season's over. Everybody's kids are back in school. Volume will start really coming back in, and it's gonna these type of late day kind of momentum swings that you're seeing are probably not going to happen. Okay, So just be careful with that going in next week. You're still going to get momentum. That's always going to be the case, but it's going to be a lot harder to push the markets because you're going to have a ton more volume. Does that make sense, everybody? Okay. All right. So just real quick plug before we get into the charts real quick. There isn't a whole ton of we're basically right where we were last couple of days. So for the week, really, we've been swinging at about 150 point range thus far in the S&P. But again, do me a favor, everybody. Give me a thumbs up on the YouTube. By the way, get the word out. Tell people to watch the YouTube. Subscribe to the channel. I have a newsletter, free newsletter that I write every weekend. If you guys want to subscribe to that, I'm also offering the free 5 days. I have a few people, so on and so forth. So all that good stuff. Okay. All right. So let's get into the actual markets now. So essentially, where we're at now, the S&P closed right. Made the round trip from last night's low. If you were watching, we had that lift yesterday. We actually hit a little bit of a pivot right around 3,900. We had a resistance level at 40, like 15. So at, all told, basically, it's almost like we're forming a little bit of a range. It's going to be really interesting. The next level I'm seeing, so there's two levels I want to give you. Kind of on the lower end, I think we probably are now, if we break down over the weekend, and that could happen because, again, the thin market, that 3,900 obviously now is becoming a little bit of a support area. So if we break that down, I don't see anything really until we get into of anything of substance until you're probably going to test the lows, right? There are going to be, like, if you look at your charts again, if you look at your daily charts or even like your 8-hour chart on the S&P, you'll notice that every good quality accumulation level has gotten a bounce, right? So we got, just all you got to do is just look at your chart. Like the first bounce came from the 41.25. We got about 100-point bounce on that. Then the Fed came out and squashed everything. Then we got some minor pullbacks again. So I do expect maybe we get some pullbacks. Now, one of the things also I've been watching, as I mentioned, is track the VIX, right? In fact, that's really what gave us the clue right at the highs around 4,300 to get really defensive. If you were reading my newsletter again, it sounded like a broken record, but it's all about anticipation, not telling everybody after the fact, right? That's one thing I pride myself in. I never, a bunch of people out there telling you trades that worked after the fact. Well, that doesn't make you any money and that doesn't help you. You got to anticipate, right? So right now, again, as I mentioned, I did a presentation on trend analysis and so forth, anticipation. I would say that, we're still kind of in that no man's land area in the S&P, meaning I still think that there's a shot at the lows, and we've already retraced more than half of the rally from the June lows. So this is where it gets really tricky. I still would give sellers the benefit of the doubt, right? I still would give sellers the benefit of the doubt. And so any rallies, we got to level up around 40, 50. There's another level that I've been, in fact, we were at TTS, we were trying to situate a trade up around 4,100, higher than that. And we just never got up there. So I would still be selling rallies. Be careful not to sell breaks. That's the thing. If you try to sell a break yesterday, you know what I mean? Like selling a new low, or, it did actually break to a new low and then the thing rallied and trapped a bunch of people. So be careful selling breaks. Just like again, I'm better, it's fine that we're still, moving lower, and I still want to give the sellers the benefit of the doubt. But again, wait for the bounces, be patient, wait for the bounces, and then short the market. Yes, you could get a break in momentum, whatever. But even if you think about it, would you be, if you're selling momentum, if you're like trying to, catch some momentum play, would you have been better off selling the breaks yesterday afternoon or even yesterday day, or waiting for the rally today and watching the consolidation and then catching the break from a higher price? What's the answer? It's almost like a rhetorical question, isn't it? Because I know a lot of you guys are like momentum, and you're doing breakout trading and all that kind of stuff. Does that make sense, everybody? So even that, take that into account. Wait for the market to come up, hit the, ideally you want to have a set and forget type of trade at a distribution. But if you miss it, you can still catch the momentum, but only after the market's rallied. I know it sounds counterintuitive, but look at your charts. You're always better off doing that. You're going to catch the best moves if you do that. Does that make sense, everybody? Put in a comment in there. I want to see what you guys are thinking about. Okay, so that's the S&P. So in a nutshell, let's sum it up. You've got levels up around 4,100 to short against, and there are some minor levels below. We are getting a little extended to the downside, and I'm seeing a lot of bearish commentary coming out and all that kind of stuff. What my main beacon, if you will, right? Guiding light. I use the word like beacon or compass or whatever term you want to use. Bottom line is the VIX, right? So, and just a couple things here. Sounds to me that things in Europe with what happened with the pipeline and ECB coming out next week. That's another thing I want to actually discuss. I think I mentioned it briefly on Tuesday. We've got ECB looking forward to next week. We got ECB on Thursday morning. And I believe, there's a lot of speculation that they're going to come out and bring the bazookas out and probably do 100 basis point. And what I'm actually with my members now, we're actually going to be setting something up in that regard. Because I do believe if they do that, you could see a nice pop in the euro. You've been watching the euro, and this is kind of similar to what I just discussed with the shorting breaks. If you've been trying to short the euro below parity, you're not. You get a little bit of a move here and there, but it's not. It hasn't. The momentum is kind of stalled out right now. But if on next Thursday, we get a big interest rate increase, which I believe is going to happen because Europe actually has record inflation, and with what's going on with Russia, I know they're stocking up. I don't know if Dennis is in here, but they are stocking up their supplies for the winter in nat gas, so that could be a positive. But nonetheless, inflation is out of control in Europe right now. So I do believe that could be setting up for a nice trade. So with my members at TTS. We are going to be setting up, going into that, we are going to be setting up some trades to try to take advantage of that, okay? And really, that is kind of one of the main focal points going into next week. Also, we did set up, just so you guys know my position, because, I want you guys to track me we also set up a nat gas, and that kind of on the same page there with all the kind of relative to what we're talking about here. We also set up a nice volatility options position. We're already in it for the nat gas using the ETFs, because obviously nat gas futures contracts are very, very volatile right now. They're swinging $3,000, $4,000, $5,000 a day. If you can bear that, if you can withstand, endure that kind of volatility, which I know very few people that can, then again, I encourage you to explore some of the alternatives, UNG, BOIL, BOIL, or COLD, KOLD, because there are some opportunities there. So we did it in the UNG, right? Because I do expect an explosive move in nat gas in the next couple of weeks. And again, the beauty about what we're doing, if you're interested in learning something like that, is it's non-directional. Right? So it's a play on volatility. Most traders, they want to guess the direction right. One of the great things about options, and if you understand the different strategies, is And by the way, that if you have a high implied volatility, what most people tell you to do is to sell premium, right? When you have high volatility. So let me ask you, how many of you guys in here trade options? I'm going to have a little discussion here, and then I'm going to move on because there isn't a whole lot of changes in a lot of these other markets. How many of you guys trade options in here? Okay, just type in the chat some participation in here. Okay, you do, Bill. It's just so it's me and Bill having a conversation this afternoon. Thank you very much, Bill. Right? Yeah. It's just me and Bill having a conversation. But that's okay. Okay, Robert. Well, yeah. Did you attend any of my? Yeah, come on board and I'll teach you how to trade options, my friend. I'll actually, you know what? I'll run a class. I'll run a class in the next couple of weeks for options. How's that? A free class just for the intro with some follow-up classes on that. Okay, so keep an eye on that. I'll announce it. Yep. So Hutch, let me ask you a question. How has this happened to you? Really high implied volatility. So you're taught to, sell credit spreads, correct? And then all of a sudden, the volatility just explodes. And essentially what happens is you essentially give up like 3-4 months worth of options premium that you've been taking in, gets kind of wiped out in one fell swoop, right? Robert, they're actually not that complicated. I don't know if anybody in here took my options class the other week. I make it super simple. It doesn't really, again, don't be intimidated. You'll be fine. Attend my class when I have it. You'll see. It's not that complicated. All right. So, all right. Couple of bullet points. So that's the S&P. I think we just covered that. And similarly, the Nasdaq. I am looking at a nice level in the Nasdaq. I also believe that the Nasdaq's probably going to go test the lows at some point. And simply, if you look at all the semi stocks, which I talk about quite a bit, semi stocks have been underperforming. They can't catch a bid. I've been looking at they're just not acting great, the semi stocks, right? And so until those, and also interest rates, right? So if interest rates keep going up, you're probably going to have continued weakness in the Nasdaq. So now, all that said, could we have a nice bounce coming in here around the, I don't know, I'm looking at about, there's actually a few levels below, but ultimately I want to be looking at about 11K as the ultimate, like where you could actually have a durable rally, if you will. That accompanied with a VIX in the 30s, right? Mid 30s. That again, that would be like if you got all that kind of put together, then I think that all sets up very nicely. Okay. All right. So that's that on the Nasdaq. Also, I mentioned 18K on the Russell the other day. We got a little bit of a bounce out of that, about a 1x, and now again we're falling right back off again. 1750 on the Russell is what I'm looking at there. Okay. So that's on the equities. Let's get into bonds. So bonds were fairly flat this week. But here's the thing. If you look at your charts on the 10-year, which is really what I'm looking at, there was a level 116.03, 115.19. I don't know if you see that. We got a nice bounce off of that. Look at your 8-hour chart on the 10-year. You can see that there. So we got a nice bounce of that. And again, we are long TLT. We are long a TLT, also volatility spread in the options market. Okay. And again, I expect a really nice move in the bond market starting probably next Tuesday or Wednesday. And it's going to be interesting because now it looks like the bonds, the bonds took the market down when rates were going up. And now that even today the market sold off. So if bonds rally, that could in fact provide a little bit of a ballast for stocks. Okay, so still in a major, still in the bond market, similar to stocks, you still want to give the sellers the benefit of the doubt. And ultimately, 3.5% and 3% are going to be the levels on the 10-year. Okay, and if we break above 118 on the 10-year, that's going to be really the key level. So we did get a little bit of a bounce, a flight to quality, I believe. So we could be shifting the bonds from an interest rate Fed kind of sell off into possibly now an alternative to stocks if stocks continue to go higher. In other words, people moving money into the safety of bonds to get the higher yield, which is now approaching 3.5 on the 10-year, and the safety of the credit worthiness of the treasuries and so forth. Okay, so you can see that today as the market sold off, treasuries, the 30-year and the 10-year all rallied. Whether that's sustainable, we'll have to see next week. Okay, dollar did make a new high, pulled back hard, and this is another kind of tailwind or headwind, I should say, for stocks, right? You cannot have stocks advancing with a strong dollar, and a lot of that had to do with the European situation that I mentioned earlier, right, where the pipeline and all that. So that's really what's going on now. Just to reiterate, where is the dollar headed next? Well, if you have any kind of level, look at your weekly chart because you have to go all the way back into the mid 2000s. 110.73 would be the next level of distribution in the dollar. So the dollar still has some room to go, which implies, again, lower currencies, lower gold, lower silver prices. That what could change, again, the dynamic a little bit is the ECB announcement on Thursday. So check that out. Okay. And then currencies have been kind of off the table. I talked about the euro, the yen making new lows. So for the most part, and we'll see. Okay. All right. The only currency, again, I'm focused on right now would be the euro coming in. That's until next Thursday. Silver's getting interesting. Silver around the $17 mark is getting interesting to me. So check out your chart. Look at the daily on silver. It's basically sitting inside. We already had a nice bounce from 18 to 20, came all the way back down. We're deeper into that level. And as long as we hold above 17, I think we're good. So I am kind of warming up to silver a little bit. And we will be positioning that either via the futures market. Yeah, Robert, 114 is really the level on the British pound, and if it breaks below that, it's almost like the euro or the Japanese yen. There's nothing that I see on the charts. If you look at your kind of forex pairs, there may be something much lower, maybe even parity against the British pound. But using futures contracts, there really isn't a whole lot that I'm seeing. So essentially, if I can't see it, then I can't trade it. in a nutshell. Does that make sense? Okay. Okay. All right. So so they're really, for me, for us at TTS, we're really just not interested in the British pound at the moment until we get some kind of price action that warrants us looking at it. Oil. Let's finish up. I got about 5 minutes. Oil. We have an OPEC meeting on Monday, right? So the volatility in oil should be exacerbated because of the lack of volume. If something comes out with the OPEC, right? But in a nutshell, I've been talking about the 85 level in oil. 85 is the floor. It looks like around 97 is the top. Very volatile, as you know. You basically, what you want to do if you're trading oil, you want to stay in at the extremes, right? You shouldn't be trading unless you're at the extremes. So that's really the bottom line with oil. And then nat gas, I just mentioned nat gas, been also very, very volatile. If you look at your 4-hour chart of nat gas, in essence, so essentially you're between $9 and $10 MBTU, and it's surprising because with what the news with the pipeline thing, you would have expected that gas to have really spiked up or whatever, but it didn't. So this is also, again, I've been talking about fair value here between the $9 and $10 MBTU. So I think it's still fair value. In other words, a lot of the, it ran from, it's basically made 2 round trips from 6 to 9.5, back down to 7, back up to 9.5. So seems to me like a lot of the stuff is being discounted right around this price level. So you'll need another kind of situation that disrupts the price in Europe, or maybe a super cold winter, or maybe the stockpiles that they're putting together aren't enough. But it seems to me like this is almost like an equilibrium, if you will. Right around this $9 to $10 MBTU level. Okay. And then the grain markets, again, we're long wheat, and I do expect some more volatility with the heat. As you know, we're getting some kind of heat waves across the country. And basically wheat around the $8 mark. Soybeans have been very choppy. Looks like they're holding around 14. I've been mentioning a $14 level on the soybean contract. So still looking at that. Been very choppy. We've been trying to trade that. It's been, we were in a couple of trades in the soybeans, and we were up quite a bit. In fact, we were up last Friday. I think I mentioned that, and then it just gave it all back. So we ended up taking a break-even trade on that, and then it's just been kind of just meandering. Been very kind of whippy trading action. So we're going to need some better price action in the soybeans as well. And then corn, also looking for a pullback in corn down in the 630 area, if you take a look at your charts on that. Okay. Any last questions before my half hour is up? So if you guys have any other comments, if not, have a wonderful weekend, everybody. Enjoy, take a little time off, refresh. Next week's going to be really, I think next week's going to be great. I think, with a lot of the volume coming back, most people coming back from vacation and so on and so forth. So I do expect then, with all the kind of interesting things that are going on. But I will be back with you on Tuesday. That will be the first day back of trading. So it's going to be interesting to see what happens over the weekend and the first day after, with all volume coming back. Okay. All right, everybody, have a great weekend. Again, if you want to subscribe to the newsletter, you want to sign up for the 5 free days or any of that promo stuff, hit the links below. If not, have a great weekend, and I'll see you back here on Tuesday. Okay, take care, everybody.